What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday, and it is a big Friday. Just moments ago, we had Microsoft announce how much they are going to spend on data centers in 2025. And it is going to be a number that absolutely blows you away. So you, being the smart investor that you are, can start to connect the dots. If Microsoft is going to spend that amount, you know that Amazon is going to spend a number probably close to that, maybe even more. You know Google is going to do that as well, and also Meta. How this is going to flow through to the other semiconductor companies and the technology industry. Talk about that and more. We also have a potential TikTok ban here in the United States. Just weeks away. We have news on that and a lot more. Better kick things off like we always do with Meta Platforms. Start of the week at 589, up about 2.5% to finish the week at 603. Boys, we have a big weekend. I should say boys and girls. We do have lovely young ladies that tune into the show. We got a big week next week, including that Supreme Court hearing over banning TikTok. We'll talk about where incoming President Trump stands on this in a moment, but we also have the Consumer Electronics Show in beautiful Las Vegas, Nevada. None other than myself will be in attendance. Folks, this is a very important time to go down in the description below. Follow me on Instagram. Follow me on Twitter. Follow the other channel if you haven't done that already. I'm going to be posting long form, short form, all types of photos, videos from the event from Las Vegas. And if you want to reach out, those are the platforms to do it on. Now, Meta ticked up this week as its large language model, Llama models, are seen outperforming both Google and Amazon. That's according to BOA. But we are just seeing incremental improvements here with the large language models. We're not seeing big jumps forward. And again, it's based on users' preference, which one you end up going with. Now, we've got the big potential TikTok ban. The former president, soon to be current president, is asking for the Supreme Court to stop the federal ban. Now, I believe in separations of power. And if the president is going to ask the Supreme Court to do something, I think the Supreme Court should weigh the law as it's written and not listen to the president. And I think that's probably what the Supreme Court is going to do. We've got hearings coming up in this case just, I think, next week. And then on the 19th, this law that was passed by Congress. Those of you, I know we've got a lot of international viewers as well. So some of you might not be as familiar with how things and laws are passed here in the United States. This TikTok ban is law. It's not an executive action that was signed by Biden that could be reversed on the 20th when President Trump is inaugurated. This was passed out of the House and Senate, and it was signed into law. That is why it is going to the Supreme Court, as TikTok is asking for that to be viewed as unlawful as it relates to the First Amendment, which relates to free speech. I don't know enough about the law. I also don't know enough about the Supreme Court to understand where they go down on this. I honestly think, just this is my own opinion and how I feel about this, I think TikTok should be forced to be sold to an American company if the United States government feels it's a security risk, and TikTok, for its part, should abide by the laws here in this country, since American countries have to go to China and abide by their laws. There is some debate if President Trump could delay it when he gets into office or reverse the decision. It depends on what happens at the Supreme Court. Trump's hands will be tied depending on what happens at the Supreme Court level. If the Supreme Court level rules that this is an unjust infringement on TikTok's First Amendment rights, well, the app is probably sticking around, and you better get down in the links down below, because I started a TikTok channel this week because it's either going to get divested or it's going to get banned. So I figured, why not now? Anytime than ever to get on TikTok. Make sure you're following me over there. Moving on to Apple, start of the week at 242. Drifting lower on Apple. Really important news as shares are kind of winding down as I'm recording this, a couple minutes before trade ends, at about $243 per share. Now, the company is offering discounts, and now we've seen this from Apple on their iPhones, other devices as well, Macintosh computers, MacBooks, and those types of things. We're seeing the company offer discounts. Before, it looked like maybe it was third-party retailers like the JD.coms. They were offering discounts, but this looks like a discount coming directly from Apple. As competition inside of the market continues to heat up, you've been following that here on the channel. Now, foreign phone sales, which would include probably a large chunk of Apple's phones, those fell off the map in November. According to data, iPhone and foreign branded phones, which you'd assume probably includes some Google phones as well, but it's probably a lot of Apple iPhones, in China tumbled 47%. So now you know why they dropped the price more recently, is cell phone sales dropped 47.4% in 2024. That was in November of last year. So got to imagine December probably wasn't good as well. And that is having analysts, including UBS, line up and saying winter is here, according to the company's iPhone weakness that they're seeing not only in China, but I'm seeing hit here in the United States as well. The new software. Again, if your mom is if your mom is like my mom and she's not texting you about AI, not asking you, hey, what's this new iPhone feature with this AI? If she ain't texting you, that means nobody's using it. Yes, you and I, we're logging into Grok. We're using OpenAI. We're using Anthropic. We know what this stuff is. That is because you're connected, you're into tech, and you and I are tech geeks. But the average person out there, the average mom, the average grandma, the average wife or whatever, they're not into this stuff, and it's not driving anything from a sales perspective. Moving on to Amazon. Start of the week at $219, drifting a little higher on Amazon this week, up to $224 per share, as we got maybe a little bit of a window into what Amazon has in store for 2025. They've got these robo-taxi ambitions. We've also seen these rumors in the past that Amazon could be potentially wanting to have an acquisition target in the ride-sharing space, and the one with the lowest valuation, the one that would probably, I wouldn't say easy from a regulatory perspective to cross, but Lyft with a $5.6 billion valuation. You got to imagine they'll tack a premium, even though shares of Lyft skyrocketed this week on this news that Amazon could be potentially getting into this game. I tell you what, I would not want to be Uber at this moment. If Amazon is going to get into this game, that means they're going to tie Lyft rides to your Amazon Prime subscriptions. And if you thought Lyft and Uber were going to head, how about you put Amazon's pocketbook behind Lyft? And I wouldn't want to get involved in that race. Moving on to Netflix. Start of the week at $8.97, drifting lower finally. I mean, this stock hasn't gone down, it feels like, in a year and a half. Down about 2% this week. This is after, though, we have big premieres of Squid Game 2, which I think is like one of the most popular shows. It had debuted with 68 million viewers during the first 4 days. I was not one of the 68 million. I can imagine a lot of you watching probably were, but you also had those Christmas Day NFL games as the ratings and the impact of those over at Netflix. Moving on to Nvidia, and it should be absolutely no surprise when we get to the Microsoft segment why Nvidia shares are skyrocketing, up 4.5% and up 6% on the week, as shares started at 135, drifting up to 144. I think we're hitting a new 52-week high any day now with Nvidia. We'll talk about more of that here in a second. The company completed a Run.AI acquisition. I think this was a software company that made software that made running AI chips more efficient, and it could actually reduce the number of GPUs needed to complete tasks. That was a $700 million acquisition, which is pretty much what Nvidia makes every probably 30 or 40 minutes. Cerence AI, I think that's how you say that. Maybe it's said another way. I'm from Stockton, I'm from California, and my dad's from the East Coast, so I get like a mixture of slang that probably comes through here on the video every once in a while. But this is an AI company. It was actually a public company, ticker symbol CRNC, and shares were up over 140% today. And this headline, probably slightly misleading, and I'm going to bet, and I would bet a fair amount of money, that we're going to see a lot of these headlines coming up, because this company announced a collaboration. It makes it seem like they're working in tandem with Nvidia, but instead they're using Nvidia's AI Enterprise, which is basically their cloud service. This is almost like me announcing, guys, Equity Empire is about to work with AWS. AWS is just like, our cloud provider. And this is basically what this announcement is. So you can imagine there's going to be a lot of these smaller AI companies that are going to, quote, collab with Nvidia and use their cloud services and then put out a press release, hoping that investors view that as something that's more unique than it really is. Moving on to Google. Start of the week at 190, drifted basically sideways to finish the week at 191 80. Now, this was interesting. This crossed, I think, over the weekend. So the Google CEO, I think this was maybe via memo, or maybe it was even maybe a voice or a video conference where the details were leaked. But he says that the company needs to brace for challenges heading into 2025. We also talked about the company's challenges with the DOJ asking for their Chrome browser to be sold. Now, we did get a little bit of news more recently. If you're not a subscriber of the newsletter, get over there. I've got some really exciting content, not just stock market content. We're going to be talking about collectibles. We're going to be talking about the car market. We're going to be talking about real estate. We're going to be talking about watches and collectible stuff. We're going to bring that all to you over on the Equity Empire newsletter. So make sure you're signed up for that. Some of that, a lot of that actually is going to be free content. So don't feel like if you subscribe, it's going to turn into this paid thing and I'm going to be selling you on a bunch of stuff. No, there's going to be a lot of free content. There's always going to be free content. So make sure you're subscribed over there. A lot of CES content over on the newsletter. Links always down in the description. But company kind of referencing that. Also, a lot of challenges as it relates to search engines. Again, you and I are tech geeks. We're probably doing some searches on OpenAI. Maybe a decent amount, a decent chunk of your search activity that used to run through Google might be running through a ChatGPT, might be running through Grok, might be running through Anthropic or even Apple's device. Google's probably feeling that to a certain degree, but as somebody that spends a lot of money on online ads, and I spend a lot of money through Google, there's been no real significant slowdown in terms of the terms I bid against, but most of the terms I'm bidding against are for 40, 50, 60-year-old people. And so those people are going to continue to use Google, but there is some pressure, I think, on the kind of younger end consumer that is switching their habits. Moving on to Microsoft. Start of the week at 424, basically drifted flat, but we had a massive press release from Microsoft saying that they plan to spend $80 billion. Let's just wrap our head around this. I know we talk about the Magnificent Seven or the FAANG stocks or whatever the hell you want to call these stocks every single week. And we're a little bit numb to the numbers because these are $3 trillion companies, sometimes $4 trillion companies in a bull market. Even the quote small companies that we talk about are $1 trillion, or in the case of Netflix, probably several hundred of billions of dollars. So we're numb to $80 billion. But for some context, you need context around this $80 billion mark, because some of you are like, well, what did Microsoft spend last year on the data center? Well, that's a great question, and you can always rely on me to bring up the numbers. Here is the addition to property, plant, and equipment. Now, some of this is probably a little bit of office space up in the Pacific Northwest or wherever else Microsoft has some offices, but my guess is the big chunk of this is not Amazon. With Amazon's addition to property, plant, and equipment, you have to factor in, it's less so now than during the pandemic, but some of that is warehouse related. With Microsoft, this is almost all data center. That was nearly $45 billion. This was fiscal year last year, folks. Okay. So this company just told you that they're going to do $80 billion. Last year they did 44. These are already astronomical numbers, and they're just about to bolt on basically another $40 billion. And again, this is not the only company that'll do this. Okay. Meta is going to have to follow this lead, not dollar for dollar, but they'll do a big number. Amazon is going to have to follow the lead here. Google also going to have to spend this type of money. Now, even more impressively than that, Microsoft has already announced their fiscal Q1 of 2025. Companies are all different kind of fiscal quarterly systems. We don't need to get into it for the context of today's show, but we've already have Q1, and that was $15 billion. You want to annualize $15 billion, you're only at $66 billion for Microsoft. That means the back half of this year is going to be a massive acceleration in terms of spend. You're looking in the spring, summer, fall, winter of this year. That is when Blackwell is supposed to be at full ramp. You're going to have north of $20 billion in a single quarter of spending from just Microsoft, let alone Amazon, let alone Google, let alone Meta, let alone all the other providers out there. This is unbelievable. This is unbelievably bullish for Nvidia at the top, Broadcom, probably AMD to a certain degree, Intel as well. All the semiconductor names, Taiwan Semi, ASML, you can go down the line. We'll be back with the Semiconductor Show on the Equity Empire channel later this weekend. We'll talk all about that as well. Now, Grand Theft Auto 6 is anticipated to be released at the end of this year. That is obviously a grand type of title. I mean, we're talking about a once every 10 years they basically release this game. I am hearing from gamers, though, that the Xbox is not the preferred platform, that the PlayStation is slightly more more preferred. We'll see where that goes when you get into later this year. There's an online component to this game. It might be good enough to play on the Xbox. I'm not saying that Microsoft and the Xbox is not going to benefit from this, but my read on the situation is the PlayStation is the preferred newer console. Moving on to Tesla, start of the week at 427, and this one drifted lower. We'll point out some areas where I think this one's going to pull back to, get you some buying opportunities for Tesla when we get to the technical segment, but we were down about 3.75% to finish the week at 410. This is after the company's Q4 sales results missed the expectations of investors. The expectations were closer to 506,000 vehicles. They delivered about 495,000 in the most recent quarter. This also marks the first year where Tesla had a year-over-year decline in actual deliveries of their car as interest rates continuing to inch up. Also, maybe a little softer environment for demands for EVs. Also, used car prices just plummeted. So if you wanted a Tesla, you might go to the used market. Also, this is of note because Tesla had very big incentives in the quarter for buying a Tesla. They offered things like free supercharging. Also, if you go to the Tesla website, if you have good credit, you can lease one of these bad boys for like $299 a month, which is basically nothing. So they were offering all types of incentives to buy these things, so the delivery numbers coming up short. Now, one thing that we don't talk about is Tesla, for the very first time, actually disclosed their energy storage business and how much energy they deployed in the quarter, and that was a record number. And if you follow our earnings videos, which we'll do later this month for all of these stocks here on the channel, that's a profitable business for Tesla. So we're expecting probably maybe some softer profit on the automobile side, but probably decent profit on the energy side. We'll certainly see that when the company reports again later this month. Now, Chinese EV makers, they reported a record delivery and on lower pricing, and you have government subsidies boosting demand there. So in China, you're not really seeing the impact. I know their rates have basically got slammed to the floor, so you have a slightly lower interest rate environment there. Also, you have those subsidies, which I think are threatened or likely to be taken away under the Trump administration. But what we haven't seen is the carryover to Tesla. Like we're seeing with iPhone, there's certainly bigger demand for domestic, not iPhone, but smartphone makers that are not Apple. But Tesla actually saw record deliveries or record sales in China. In fact, they were up 12.8% month over month, and year over year, China sales were up 8%. So the company is not being impacted like Apple, and maybe we're looking at other companies as well, like Starbucks and Nike. They're being impacted in China, Tesla bucking the trend, but that could be maybe a headwind going into next year, because if Nike and Starbucks and Apple are seeing headwinds, you got to expect that maybe Tesla will face them as well, but maybe not. Now, we obviously had those tragedies over the weekend. Thoughts and prayers and everything with those families. You also had that explosion in Las Vegas outside of the Trump Hotel of the Cybertruck. And just a reminder to stay safe out there wherever you might be. Moving over to the technical segment, we have pulled back to an area where if you like buying the dip, it's not really a dip, but this is where buyers have stepped in really since the back half of the year. You've been on this breakneck trend and you've been hovering the top of the range. I know I put this red line up here, but you can float on that for a while. We're anticipating at some point deeper pullbacks in the markets. When you get those, we'll be on here pounding the table. There are a lot of value stocks. That is what I'm posting over on TikTok and Instagram. There's a lot of value. I'll even probably do a video. The separation between value and kind of this high-flying tech stuff, there's a huge separation there. And so I've been focusing on value, why I wait for these more growthy names to pull back to better levels from a buying perspective. Meta has pulled back. Like I put these intermediate trends. Once I launch Blue Chip Stock Investor, I'll do a whole color coding segment on the charts. You'll also get access to all of my charts as well if you don't want to put these lines in yourself. Right now, a purple line is what I would call an intermediate trend. I probably should change this one, but that was the intermediate trend. Probably still on those things. You bounce off these intermediate trends. And it looks like, to me, Meta wants to set up back up here at the top, probably as we head into earnings. That's one thing as we drift into earnings with all these companies. They're all coming probably the last week of January. Some companies like Tesla and Netflix tend to report during the second or third week. And you have Nvidia that goes into February with their reporting. But these will all move kind of in tandem. But what ends up happening is you tend to set up at the top, okay? You set up at a high and then you wait for earnings. If the earnings are fantastic, you sometimes can blast off to a new high like we've seen with Meta more recently, or you get rejected at that high and it creates buying opportunities. I think Meta is going to set up at a new high as we drift into January. This one's probably going to get back up into the 650s relatively soon. Moving over to Apple. This one has pulled back predictably from the new higher high than it made. The fundamentals just with Apple aren't good enough for it to really run away like maybe we're seeing with Broadcom, maybe Oracle as well. This one's going to want to pull back to this channel. Apple reports their earnings also on the 30th. I think you probably hover up here with Apple unless the news really takes over. The news really takes over that, it's over for Apple in China. They've missed AI and those types of things. Well, you're probably going to have some good buying opportunities. Switching over to Amazon. This one got rejected kind of in the middle of the channel, which can happen. This is not a big deal. This one's pulling back. You can buy the dip on Amazon. Moving on to Netflix. This one also made a new kind of, I would call this almost like a blow off top high. It is working its way back, consolidating up here. I mean, I guess you can buy Netflix if you really believe in this one. This one's just gone parabolic. A retest of these highs back here at 730 probably be the first area I'd be excited. Nvidia's trend has flattened out a little bit. We were on what I would call an absolute kind of breakneck trend. That has broken, but that doesn't mean that you break down and you crash, especially when the fundamentals are as solid as Nvidia. I think you're just kind of flattening out, smoothing out the up channel. This one also could be bought if you felt like it. Google. It's closer to its latest higher high. You're probably waiting for pullbacks in Google that, we could see some drift into earnings as you get those. It looks like actually the first week of February for Google. That's a little bit later than normal. Moving on to Microsoft. I've had this green box on here for a while. It starts at 404. You've had maybe a couple of days just over the past year where you could have gotten it down at those levels. Microsoft should report their earnings the last week of January. It's actually at a level, if you believe this new channel is going to hold, that could also be a buying opportunity. Now, speaking of buying opportunities, Tesla's starting to look interesting technically. We broke to new highs, created a new higher high. This is all very, very good. Created a new higher high up into the 480s, 490s, close to 500. No big deal. You came back and retested those highs. Again, those highs were basically established back in 2021. Retested those highs. That's a tough area to hold. You tend to retest those. I tend to see these stocks, not all the time, but you tend to get back into kind of the more intermediate channel that you've been on. That is what's happened with Tesla. Back to the middle of the channel takes you back to 340. There's also an area that I like. It was the highs back here in 2021, highs back here in 2022, also highs back here in 2023. This area of support back here at about 299, 300. Excellent buying opportunity. Some of you are saying, well, how can it get back to 400? Guys, this was literally a $140 stock last year. This is volatile. If you don't like to see stocks go up big time and then at the same sentence come back down big time, Tesla is not the stock for you. If you have the stomach of a big boy and a big girl, you get into Tesla, and some days it's up big and some days it's down big. I think we are in for a period where this one could continue to move lower. You're going to have opportunities lower. Now, complicating the situation, You do have earnings on Tesla. It looks like the last week of January. So these things have bumped around. We'll get the confirmed dates next week. Now, next week's show could be delayed a little bit. I'll be in Las Vegas on Friday. Whether or not I have time on that Friday to do the video, I'm not exactly sure. I have kind of a PM flight where I'm flying back here to California. It's possible that next week's show is delayed into Saturday. I'll make posts on my social media accounts, which again, you'll want to find links down below, including the brand new TikTok channel. I'll announce if this show is going to be delayed on those places. Hopefully you guys enjoyed today's video. See you next week at the Consumer Electronics Show. Make sure you're following me across all platforms and subscribe to the newsletter. Lots of content coming in 2025. Thanks for tuning in. Stay safe out there and good luck with your investments.